Hi everyone, let's go over my new bullish and existing bearish Elliott Wave scenarios on Bitcoin, starting with the bearish medium time frame and low time frame scenario, where on the medium time frame we're looking at a three-wave structure and then an A, B, C or a WXY for eventually more downside. In this particular scenario, I at the moment labeled this as a 5-wave structure to the downside in a wave A, followed then by a 3-wave structure in a wave B, before then continuation to the downside in a wave C. Now, if this wave A is indeed a 5-wave structure, 1, 2, 3, 4, 5, then the high of this green wave B is not allowed to take the high of the origin of this wave A. So that is also the invalidation at 31K for this particular scenario, where if this scenario becomes invalidated because price is going to go above the high at 31K, we have to look either at this to be a 3-wave structure, so a 3-wave over here, followed then by an expanding flat move, which is something like this, being a 3, 3, 5, or we have then a WXY for more downside to come, because in the bearish scenario, we still expect a move to the downside. So if we then zoom into the range that we had over the past couple of days inside this wave B, it is pretty complex, but then labeled this as a first structure to the upside, followed then by a 3-wave move to the downside, and then either in a wave C, which is an impulsive structure to the upside, or expecting a 3-wave move to the upside, to then finish the blue count in an A, B, C or a WXY, which then also finishes the blue B. Some additional confluence for the end of this potential B is the target box over here, which sits between 30.2K and 30.4K, which is still not touched. And we also have a lot of liquidity over here. So people that went short throughout this range over here most likely put their stop losses above these highs over here. So that is the liquidity that if price moves to the upside, people with bigger positions are going to take those stop losses for then potentially a move to the downside, because hey, the stop loss of a short is a buy position. So people that have their stop loss over here, if the stop losses get hit, they basically buy back their initial position. But because of the buys that are then being triggered, a bigger short position can absorb those buy orders for then potentially a move to the downside. And you of course also have the breakout traders that think, hey, there's a big resistance over here. We already got rejected like 3 times now in this area. So when price is now going to push to the upside again, I'm going to long over here, because now I expect upside to come. And what does it do? A long is a buy order, could be absorbed by a big short position for then a move to the downside again. So that's basically the scenario to think of whenever price is going to take this high, maybe in the future, for then a potential move to the downside, which can be pretty harsh, pretty impulsive indeed. So if we then look at the structure that we have going on, of course in blue we have then this 3-wave structure, but then in the white count you can see a WXY, where most likely this move to the downside is a Y wave, which is a 3-wave structure and not an impulsive wave, because this range over here is starting to become too long, but I'll show you that on the lower time frames. So inside this wave Y, an interesting potential target area for this wave Y is between 27.6K and 27.2K, which is basically between the weekly and between the triple bottom. Also the 886 over here, taken from the low of A to the high of the blue A over there, and the 1-to-1, which is taken from the high to the low of W to the high of this wave X. So definitely an interesting area of a little bit of confluence. And we do have a target box in the middle between where price is now and the potential target area over here, which is the blue zone that you see. And that blue target box is sitting between 28.2K and 28K for maybe a little bit of support. And this target box might be very important in the bullish scenario that I'm going to show you in a little bit, because I first want to go over the bearish scenario. So this is something to look out for. And then eventually more downside, where we do have a couple of target boxes, but hey, we're still ranging here in the middle. So this is something to talk about in a later stage. If we then zoom in inside this bearish scenario and actually have a look at mainly why this is a bearish scenario, the whole reason that medium time frame bearish scenario that I just told you about exists is actually because of this structure over here, which looks to be a little bit like a WXYXZ, which is a corrective structure. It's quite rare, but then you have a 3-wave structure in a W, corrective X, 3 waves in Y, corrective X once again, and then another 3 waves in eventually a wave Z. Now what you want to see in a WXYXZ is the wave Y ending or rejecting at the 1-to-1, which is taken from the low of W to the high of W to the low of wave X. And you can see it on the chart. Very nice rejection indeed, for then an expanding flat ABC to the downside for this wave X. And then the most common target for a wave Z for a WXYXZ is actually the 1-to-1 as well, taken from the low to the high of W to then the low of this wave X. So that's actually very nicely playing out. And this looks to be then a corrective structure to the upside, where now then you expect downside. And the reason that because of this structure, we are thinking on a medium time frame that this is still like an ongoing correction, like it takes a very long time, is because if this is a WXY correction, a WXYXZ can only exist in a wave X or in a wave B. So this has to be a wave X or a wave B, meaning it's the middle of a WXY or an ABC. So it's the middle of a potential corrective structure, which then is most likely a corrective structure continuing to the downside. And that is why we have the target area here as well. So that's how different scenarios from different time frames are actually like helping each other. Like the lower time frame counts are supporting then the higher time frame scenarios. Now, if we then do look into the 15-minute and have a little bit of a look what's going on over here, we are looking at then in this bearish scenario, this to be an ABC, like a corrective structure to the downside. It's quite difficult to actually like count a proper like 5-wave move, like a 1, 2, 3, where is wave 4? And then eventually a wave 5, right? Wave 4 is like non-existent. So it, at least on the 15 here, makes more sense to count a 3-wave structure, where then this is another corrective pattern, 3-wave structure or correction, WXY, and whatever the corrective pattern is, of course, to the upside, before then eventually continuation to the downside, where once again we have a target box over here that might act as a little bit of support, or if we do move further to the downside, we have the target box that I mentioned already. So this is something to look out for on the lower time frames. Now then, the bullish scenario, because I spoke about the bearish scenario, but in Elliott Waves you always need a bullish scenario as well. Now this is not preferred, and I will explain you why, but it is something at least to take into account. So what are we looking at, right? If we zoom out a little bit, and I actually will do a macro and high time frame video tonight at 7 p.m. Central East European time, but a little bit of an idea shared over here. If this is a wave 1 and a wave 2, and then this is another 1, 2, then we might be in a potential bigger 3. So if we then zoom in to this corrective structure, like basically the wave 2 that is then already finished with this C, and we look at the potential 3 to the upside, this is what I'm looking for. So this is the very bullish scenario where we're just gonna fly, right, through all the resistances all the way up to the moon, basically. So what are we looking for? Well, this structure to the downside can be a 5-wave move as explained, a 1, 2, 3, 4, 5, which in the bearish scenario is a wave A, after which you expect a B and a C. However, because this is a 5-wave structure, it can also be the end of something. It's either a wave C, a wave A, or a wave 1. If there is an impulse after like a certain like pattern, if you see a first impulse, it's also always going to be a C, an A, or a 1. So in this scenario, this impulsive structure is a wave C, which means it is the end of a certain structure, and you now expect continuation to the upside. That means if this is or wants to be a wave C, this move up has to be a wave B. And then over here, you need a downwards wave A. So this has then to be a 3-wave A, followed by a 3-wave in the B, and then a 5-wave C, which is an expanding flat A, B, C to the downside, where most importantly for a wave C is taking the low of wave A in an expanding flat. If it is an expanding flat, you want to see the low of wave A taken, else it's going to be a running flat, which is very, very rare. But in this scenario, A, B, C, taking the low of wave A, which has been done, very nicely played out. Okay, nice. So that's one, right? Now this wave B is very, very high in an expanding flat wave B, because if I actually pull a fib from the high to the low of this wave A that I have on the chart at the moment, and I open my wave B expanding flat target, you can see that, well, let's actually move it to the right side over here so you can actually see it more clearly. But you can clearly see that this wave B even went above the rare target, being the 1.618 on the 4-hour time frame. Now, if I switch to the daily, you see that, well, not really any daily candle closed above the 1.618. So maybe on the daily time frame, this wave B looks a bit better. But hey, the 4-hour is still a pretty high time frame, actually, at least in my case as a day trader. And this is not something that looks too nice. Which is another reason this is an alternative at the moment. But if we then zoom into what we have over here and actually go to the 1 hour, so what we are then looking for is this then being an A, B, C. So that means the second wave 2 is finished, and then a 1, 2, 1, and then a 2. Now this second 1, 2, this wave 2 in an expanding flat is extremely shallow, but I'll highlight that in the video tonight in the macro and high time frame scenarios video. Extremely shallow, another reason it's an alternative. And then this move to the upside is then a wave 1 in a 1, 2, 3, 4, 5, followed by an ABC. And now you can see wave C is then smaller than wave A because the low of A was here, the low of C is over here. But in this particular scenario, either an ABC, well, if this is a wave A, 5-wave structure, which is very difficult to count, by the way, in this very impulsive move down. But if this is a 5-wave structure, you're talking about a zigzag, which is a 5, 3, 5-wave move, where wave C, by far, of course, most commonly takes the low of wave A, which is not the case in this scenario. So that is extremely rare. So maybe you can count this better as then a WXY, where this has to be a 3-wave, which also is very, very weird as a 3-wave structure, because if we zoom in, you then have a wave 1, a wave 2, and then this is the whole 3rd wave. So you can see how extended this is. So basically, that one very vertical move to the downside, this one, is making it very difficult to have a solid count in this whole ranging structure over here. But of course, we're trying to do our best and give you the best clarity I can. So in this scenario, this is just a 3-wave structure. WXY, ABC doesn't matter, right? But at least the correction then is finished over here, which this then being a wave 1, corrective structure in a wave 2, and now we're looking for upside. So that basically means that in this structure, we then have another wave 1, followed then by a wave 2, and then eventually continuation to the upside in a wave 3, right? So let's go to the lower time frames then. So if I open the first lower time frame scenario that I have, and I just remove a bit of the clutter, right? So this is the low of this wave 2, right? So we don't want to see price going below this low in the bullish scenario where we're going for upside. By the way, one thing before I forget and go into the lower time frame, we do have bullish divergences that not yet played out. These are relevant for both the bullish and the bearish scenario, where the target for bullish divergences is the high over here between this low and this low. Bullish CVD divergences, lower lows on CVD, higher lows on price. Target is the high over here at 30K. Both relevant for this bullish scenario where you expect continuation to the upside, but also the bearish scenario where you take the high and then drop to the downside, right? Very, very important. So, okay, lower time frame stuff. Let's go. 30-minute time frame, where we are looking then for a starting diagonal, a leading diagonal, as it's actually officially called, where this is then a wave 1, 2, 3, 4, and eventually a wave 5. And there's two scenarios, because either this wave 5 ends over here or it ends over here, and that gives a different corrective pattern. It doesn't really matter for the potential setups or trading scenario, because the invalidation is still going to be this low. So wherever one is potentially longing in the scenario, the invalidation should always be at 27.6K down here in a bullish scenario, expecting more upside. Now in this scenario, we then have a leading diagonal. And this is another reason why this is an alternative scenario. This leading diagonal is very awkward. So, okay, yeah, we have then a wave 1 followed by a corrective 2. Then we have a wave 3, corrective 4, 5. Now, in a leading diagonal, either wave 1, 3, and 5 are impulses, which means 5-wave structures to the upside, or they can be zigzags, which is a 5, 3, 5-wave move, right? So in this scenario, we're talking about zigzags. So we then have a zigzag structure, ABC in a 1, corrective in 2, ABC in a 3, corrective in 4, and then another ABC in then this wave 5. However, this wave 4 is the problem in this particular count, because a wave 2 and a wave 4 in a diagonal, leading diagonal, should be zigzags. Now, one could potentially see a zigzag in here, like a 1, 2, 3, 4, 5, corrective to the upside, and another impulse down in an A, B, C. Nice. This wave 4, however, you can see that this is then, should be a wave A, B, C. However, we took the highs of wave 3, which is not allowed in a zigzag, because it is a 5-3-5 structure, where if this is an A, B, C, wave B is not allowed to take the high of the origin of A. But that is exactly what happened. So therefore you're thinking then about an expanding flat, but an expanding flat in a leading diagonal is not allowed in wave 4. So this would kind of invalidate a potential leading diagonal, but hey, we always need a bullish scenario. So leading diagonal it is, and this is the first of the two bullish scenarios I'm going to show you, right? So then after this, we have an expanding flat in this wave 2, in this then being a wave 1, a 3-wave in wave 2, Now you don't expect price to go below this wick anymore, you expect upside, right? Where we're gonna take the high of this wave B as a bare minimum, but you don't really expect price, and this being an ABC, to go below this wave C, or wave 2 is going to be extended, where this corrective structure is only the beginning of a wave 2. We then get another corrective structure, before then a move to the downside once again, taking this low, but not, and that is again the clear invalidation, not this low over here at 27.6k. That is the invalidation for the bullish scenario, where if we go to the second scenario, you see that now the wave 5 moved up one high. So what I did right now is having this as a wave 1, wave 2, 3, 4, 5. And now basically wave 1, 3 and 5 are not zigzags but impulses. So we then have this as a 1, 2, 3, 4, 5. Very short wave 4 though, compared to a wave 2, which is very uncommon. Usually wave 4 is longer than a wave 2, but hey, we need the scenario. 5 waves there, 3 wave correction, 1, 2, 3, 4, 5 wave move in a wave 3, 3 wave correction, before then a 1, 2, 3, 4, 5 wave move in then this wave 5, ending the diagonal, therefore wave 1. And this is then a wave A, followed by a corrective wave B, before then a C to the downside, where the targets then come into play. And I mentioned this target is going to be important for potentially the bullish scenario, where if this is only the starting structure in a wave A, being a zigzag 3-wave move, now being in a wave B, where potentially this target box over here, sitting between 29.7k and 29.5k might be important resistance for then eventually a move to the downside for wave 2, the blue wave 2, where we have a support area down here between 28k and 28.2k. Now the invalidation of this scenario again is taking the low over there. Let's actually put it on the chart. This is the invalidation again for the bullish scenario. So going down to this target box is absolutely fine. So this is very important. Now, what is the problem here? It's again this wave 4, right? So we have an impulse, impulse, impulse. Wave 2 can be a zigzag, very nice. But this wave 4, how is this a zigzag, right? That's a zigzag, like a 5-3-5 structure. Well, it can't, because again, we took the high of this wave 3, and this time with this high over here. So the wave 4 is the problem twice in a leading diagonal structure. Then, could you put the wave 4 to the left and say, hey, now wave 4 finished, so maybe there's some sort of a zigzag in this structure over here, very vertical zigzag if so, but let's say wave 4 is finished over here, okay, nice. But then the problem is wave 5, because now wave 5 needs to be an impulsive move, because wave 1 and 3 are impulses, so 5 needs to be an impulse. But how are you going to count an impulse over here, especially with this structure, right? You need then like what, a 1, 2, 3, 4 wave 5, big overlap between 2 and 4, not allowed in an impulse unless a diagonal itself. But yeah, this becomes very, very unlikely, right? So that is also why it is a alternative scenario. The bullish scenario at the moment is an alternative, but as long as we don't take this low, it is not invalidated. And that is a very important message. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.